There are books, and then there are books that find you. Not because you were searching for them, but because perhaps at some deep level they were always meant for you. You may not realize it yet, but The Intelligent Investor is one such book. A book that has quietly changed the destiny of millions. And if you are watching this video right now, there is a high chance that it has finally found you too. This is not just a book about stocks or markets. It's a book about life, about psychology, about patience and discipline, about avoiding the traps of greed and fear, the two most powerful forces that control not just Wall Street, but every human being. Young Benjamin saw firsthand how easily fortunes could be lost in the stock market. His family, once comfortable, now struggled to survive. While most children might have grown bitter, Benjamin grew curious. How could something so powerful, so enticing as the stock market, bring both prosperity and ruin? This question stayed with him throughout his life. With an extraordinary mind, Graham won a scholarship to Columbia University at the age of 16. By 20, he was already working on Wall Street. But even as he made money, the painful memories of his family's financial downfall fueled his desire to understand how to invest safely. Graham did not want to gamble. He wanted rules, a framework, a system that could protect ordinary people from the emotional roller coaster of the market. And so, piece by piece, over decades of study, failure, and success, he built his masterpiece, The Intelligent Investor. Warren Buffett, widely regarded as the greatest investor alive, once said, "By far, The Intelligent Investor is the best book on investing ever written." But what exactly makes this book so powerful? And why does it continue to be relevant even after more than 70 years since its first publication? Today, on MindTap Summaries, we are going to explore not just the principles of The Intelligent Investor, but the incredible story hidden behind these pages. You won't simply learn investing rules, you will step into the mind of Benjamin Graham, the father of value investing. You will walk with him through the Wall Street of the 20th century, understand his mistakes, his triumphs, and how he developed a timeless strategy to beat the market. So sit back, relax, because by the end of this video, you won't just become a smarter investor. You may actually become an intelligent one. The man behind the masterpiece. Who was Benjamin Graham? Benjamin Graham was not born into wealth. In fact, his story begins with tragedy. Born in London in 1894, Graham moved to New York with his family. His father ran a small business that collapsed during the Panic of 1907, and soon after, his father died. Benjamin's mother tried to support the family by investing in stocks, but with disastrous results. The market is your servant, not your master. At the heart of The Intelligent Investor lies one of Graham's most famous teachings. The market is there to serve you, not to instruct you. Imagine the market as a moody business partner, whom Graham called Mr. Market. Every day, Mr. Market knocks on your door offering you a price to buy or sell your stocks. Some days he's optimistic and offers you a high price. Other days he's depressed and offers you a low price. But here's the secret. You don't have to follow his moods. You can ignore him entirely, except when it's to your advantage. This simple metaphor changed everything. Investors, Graham explained, lose money not because of bad companies, but because they get trapped in Mr. Market's emotions. They panic when prices fall. They get greedy when prices rise. But the intelligent investor stands apart, calmly making decisions based on value, not emotion. The two types of investors, defensive and enterprising. Graham understood that not everyone wants to study balance sheets, analyze financial reports, or follow complex market data. And that's perfectly fine. That's why he divided investors into two types. The defensive investor, for those who want safety, peace of mind, and minimal effort. This approach focuses on building a diversified portfolio of stable companies, bonds, and index funds. The defensive investor doesn't try to beat the market. He simply tries not to lose. The enterprising investor, for those who are willing to do the hard work, to analyze companies deeply, to study industries, and to search for undervalued opportunities. The enterprising investor aims for higher returns, but only with careful research and disciplined strategies. Both paths can lead to financial success. But whichever you choose, remember, intelligence in investing is not about IQ, it's about temperament. Margin of safety. The golden rule: if you take away just one idea from the intelligent investor, let it be this: always leave yourself a margin of safety. Just like a bridge is designed to carry far more weight than it needs to, your investments should be protected from unexpected shocks. Buy stocks only when they are priced far below their actual value. This cushion protects you when things go wrong, because in investing, things will go wrong. The market will crash. Companies will disappoint. Economies will falter. But with a margin of safety, you survive. And more importantly, you prosper. Speculation versus investment. Know the difference. One of the most dangerous traps for investors is not knowing which door they are walking through. Graham drew a clear line. Investment is based on careful analysis, offers safety of principle, and promises adequate returns. Speculation is pure guesswork, chasing quick profits with little understanding of the risks. Most people who think they are investing are, in fact, speculating, chasing hot stocks, following market trends blindly, or gambling on rumors. All these are recipes for disaster. The intelligent investor understands that wealth is built slowly, patiently, and with discipline. And this is just the beginning. The true magic of the intelligent investor is not in complex formulas or secret stock tips, but in its timeless wisdom about human behavior. In the next part, we will dive even deeper into Benjamin Graham's strategies. We'll explore how he selects stocks, the role of bonds, how inflation affects your wealth, and why patience is your most powerful weapon. Stay tuned.